Five stocks I'm buying now, August 2024 edition. Welcome in, folks. My favorite video I do for you guys each and every month. We're about to get into why these five stocks have major upside ahead, okay? We got a lot to get through in today's video, so all I need you guys to do is smash a like on this video and make sure you're subscribed here to the channel. That's it. It's a beast of a video. Let's get rolling here, okay? First one of these five stocks up here is a company named Shopify. Shopify's $50-something a share right now. We can call it around $56. This is a huge buy for long-term investors out there. I see upside for the stock to $250+. I'll share kind of my upside targets on each of these stocks for the long term here in this video here today. This is a growth beast company. Every dip is a buy in regards to this company. A lot of people use Shopify on a weekly basis, but they never even know what's going on, okay? Obviously, Shopify is a massive e-commerce company. They've exploded in terms of their growth over the last few years, and they continue to head upward. And this is a type of company that they attract really just about anybody to use a Shopify store who wants to sell something online. They now have millions of merchants worldwide. They're about 10% of total U.S. commerce. 170 plus countries they're in. $444 billion in global economic activity. And the great thing with Shopify is they will meet you at the price point that's appropriate for you, right? So let's say you got a small mom and pop type e-commerce business, right? They got a plan for you, $29 a month, and you can get everything you need to kind of be a successful e-commerce brand out there. If you're a startup, something like that, right? It's affordable, right? And it's not like Shopify is going to make bank off you, but they're going to get a customer hopefully for the long term, and you can be successful there, and maybe you'll upgrade your plan over time. If we look at something like the Shopify for small teams plan, this is $79 a month. This is for more mom and pop businesses that are maybe a little more established. Then they have their advanced plan, which is $299 a month. This is for really like businesses that are doing like $1 million plus, which you're not a big business. If you're doing $1 million plus, you're like growing into like becoming like a mid-sized business, but you're still not even a large company or something like that. Big businesses, they have a plan for big businesses. That is $2,300 a month. That's their plus plan, and that starts at $2,300 a month, okay? And so you got to understand there's a massive amount of very large companies that will use Shopify. And you might say, why would they use Shopify and not just do it in-house? It's much more seamless. It's likely Shopify is going to do it much better than you could build your own e-commerce platform on your own. Let's put it that way, right? Now, this might shock you. What I'm showing you right there in front of you, you're going to probably have your mind blown by seeing what I'm showing you right now. This is the amount of Shopify buyers. This is how many people buy from Shopify stores per year. Last year in 2023, nearly 700 million people bought from a Shopify store. And so sometimes you hear Shopify, you're like, they can't be that big, right? Well, it's massive. Almost 700 million, because you got to understand, so many people are checking out with Shopify stores, and you don't see any Shopify branding, so you don't realize it. You might be using some large company, right, to go ahead and do a checkout, and you think it's their own website, or you think it's their own e-commerce platform or something like that, and it's actually, you're going through Shopify when you go to make that transaction. It's unbelievable, right? Now, Shopify revenue, look at this. This is what we call scaling of a business model. It is absolutely beautiful. It is up and to the right. That is the best thing you could ever see when you're investing in a company. You know who this reminds me a lot of? That very small company named Amazon. Amazon. If you look at Amazon's growth in revenue over the years, it reminds you a lot of Shopify. Just Shopify's very early days in their growth cycle. Shopify's kind of in their, we can call it 2000 to 2010 area for kind of where Shopify's at right now. Amazon's obviously a much more established company now at this point in time. I'm an investor in both companies. Amazon's a big position for me already. Shopify's a really small position. I want to build it to be a large position. Now, my projections here for Shopify are this. I had them doing an average of 20% revenue growth a year. Now, that's a slower rate than what they've been growing at. I have them doing about 50% net income growth on average per year. You might think that's high for Shopify. It's not, and I'll show you in just a moment. That's actually a pretty conservative number for a company like Shopify. That would put them at net margins of about 22%. Come 2028, this is through 1000xstocks.com, running the valuation numbers here, right? Now, if you're growing top line about 20%, you're growing your bottom line about 50% on average a year, you're going to command somewhere between a 50 and an 80 PE ratio in that sort of growth environment, right? Which would then put the stock price at somewhere between about $150 and about $250 roughly come 2028. So a lot of upside in regards to this company. And once again, you might think, isn't that a high number? It's not. Look at how much the company's been growing their earnings per share. Current year expected earnings per share growth is 747%. This is taking analyst projections in what kind of analysts are forecasting here, right? Next year earnings per share growth, according to analysts, is going to be about 116%. So when we do a 50% on average, 2025 through 2028, just understand that's a much, much slower clip than what they've been growing earnings per share at here, okay? So additionally, it's not just about the income statement, it's also about the balance sheet. This company's sitting on about $5.1 billion of cash and equivalents in marketable securities, which adds huge protection for the business model, which those numbers alone is way more than the total assets of the entire company. It's one of the strongest balance sheet companies you're going to possibly find out there. So when I look at Shopify, this is a huge buy the dip opportunity in regards to the stock. If you can get it under 50, it's even more beautiful. But in the end, here's the thing you got to understand. This is so important everybody understands this point I'm about to make right now. Okay, listen. If you buy Shopify at 55, 45, 50, 60, 65, in the end, it's not even going to matter. It's not even going to matter. Shopify is a type of company that should be several $100s a share in future years. And so when it's all said and done, it doesn't really make a sense. I have Meta shares that I bought at $88.94. I have Meta shares I bought at 100 something. I have Meta shares I bought at 150. I have Meta shares I probably paid 200 for. In the end, it really didn't matter. Meta's up a ton from there. It's like a $500 stock here today, and eventually someday it's going to be a $1,000 plus stock. And so when you look back, it doesn't mean a lot. And so when you look at something like Shopify, if you can get at 50, 55, 60, it's not going to really matter in the end. So just a little food for thought. Everybody sometimes wants to time it out perfectly and buy the bottom in regards to these stocks. You're not going to buy the bottom. You're not going to buy the bottom. It doesn't work like that. And don't be scared of that. Don't be scared of that at all. When you're in companies that have big, great long-term futures, you got to get in those positions. And then if you get a chance to buy it for any significant amount down, great. Just say thank you. That's all I'm going to say about that. Just say thank you, okay? Before we get into stock number 2, the pinned comment I'm going to put down there today, if you're looking to take your game up to a much higher level, become a great investor, learn how to scale your portfolio, learn how to run your portfolio properly, learn how to identify undervalued assets in the market, those sorts of things, you can apply to join a private group, get access to 1000xstocks.com, which I'm going to be showing you a lot of in this video here today. That will be pinned comment down there. These folks took their game up to a much higher level, right? They joined the private group, they scaled their portfolios, and now we have so many people in there with 6 figures, multi-6 figures, 7 figures, multi-7 figures. I mean, it's crazy. I see some of the screenshots. Somebody posted their portfolio the other day. It was like $3-point-something million. It's unbelievable, but you got to take your game up to the next level. Join the private group. That's pinned comment down there. PayPal is the second of these 5 stocks. I have a $180 price target on this stock long term. Now, in regards to PayPal, it's about a $65 stock as of right now. You got to keep your eye on something very important because you understand the time period we're going through right now. Not a lot of people understand what's actually going on in the economy, what's going on with consumer brands, big companies, things like that, right? If we look, there's devastation all across the economy right now when it comes to big companies, big company numbers. We're going through really like a consumer recession right now. They just haven't quite realized it, and the mainstream media hasn't really caught up to this consumer recession we're going through right now. You look at a big company like Starbucks, that stock's down 21% so far this year. Celsius is down 36% just in the past 3 months alone. Big energy drink company, a company like Ulta Beauty, one of the most well-run retailers ever, down almost 28% so far this year. Lululemon is down over 50% so far this year. Nike's down 31% so far this year. Boston Beer Company down about 20% so far this year. And keep in mind, we're not even in a stock market crash technically. And if you look at the S&P 500 and the NASDAQ, and yet you're just seeing all these major consumer brands devastated across the board. This is what happens when you have people get sliced and diced by inflation for 3 years. This is what happens, right? And so you got to understand the time period we're going through. And so when you can find companies that are still able to put up great numbers in this sort of environment, it's special. Look at Hershey's. Hershey's just reported earnings. Hershey's, a chocolate company. They had a 17% drop in their sales. That's like ridiculous. I've never heard of Hershey's sales dropping 17% ever. Like, that's ridiculous on a year-over-year basis. That's crazy, okay? So given all that backdrop, I just ran you through all these consumer companies having so much trouble, you would assume PayPal, a company that owns PayPal and Venmo, right? You would assume their numbers have to be rough in this sort of environment, right? No. Look at this. Their latest income statement was an A-. Their revenues went up to $7.8 billion from $7.2 billion in the same quarter last year. As far as their operating income, it went to $1.3 billion versus $1.1 billion in the same quarter last year. Their net income went to $1.1 billion in this latest quarter versus $1 billion in the same quarter last year. EPS on a diluted basis went to $1.08 versus 92 cents at this same time last year. So you look at a company like PayPal, and we're not seeing any signs of all this consumer devastation that you're seeing out there in the economy outside of PayPal. So you look at a company like PayPal, and you got to wonder, what would their revenue growth have been if the consumer was in a great spot? If the consumer didn't get sliced and diced by inflation for 3 years, right? This is something you've got to consider. Maybe PayPal would be putting up 12%, 15%, 20% revenue growth right now if it wasn't for the fact that the consumer has been destroyed out there, right? This is food for thought. When you see companies that are reporting great numbers in a super tough environment, that's special. That's very, very special. And there goes to Alex Chris. This man came onto the company at the end of 2023, and so far he's been doing a heck of a job. He's got user growth going up again for the first time in a long time. User growth was just going down and down and down and down and down. He's got it trending back up again. He's got the revenues in a great place, even in this horrible environment. He's got the operating income going in a great place, the earnings per share, the net income. Everything is trending exactly the way you would want it to trend. Margins as well. He's done a heck of a job already, and keep in mind, he's still early days. He's only been at the company for, probably less than 9 months. So, probably 9-10 months, somewhere around there. Imagine after he's been at the company 2 years, 3 years, 4 years, 5 years, a lot of the innovation he has the teams working on right now, is you're going to really start to see the fruits of that labor come in 2025, 2026, 2027. So he's doing an amazing job running this company. Now, if we look at PayPal, one of the best things about PayPal is you're getting this company at a very low multiples. I mean, forward P of 14, 2-year forward P 13, like this is way too low. For a company like PayPal that's as solid as it is, come on, man. At a 60-something billion dollar market cap, and keep in mind they got a big old share buyback on right now. So they're going to be taking a ton of shares off this market, continuing at least over the next year, if not the next couple of years here. Now, let me show you my projections for PayPal here. I think these are pretty darn conservative projections, to be quite honest. I have them doing an average of 8% revenue growth per year from 2025 to 2028. Keep in mind, they've been doing about 8% here recently, and that's even in this horrible consumer environment. Hopefully the consumer environment gets better in 2025 and beyond, given that we shouldn't have to deal with this horrible inflation we've been dealing with, right? Net income growth, they've been doing about 12% a year because he's keeping expenses in check in a major way. And so you should get some nice operating leverage in this business model. So I think 12% is a pretty conservative number when it comes to net income growth, right? That's a lower number than they've been doing recently. So a 20 to 30 PE is in the right range for a company that, is growing about 8% revenues, 12% earnings per share. So that puts the stock in 2028 somewhere between about, we can call it about $130 and about $190 a share come 2028, right? So a lot of upside in regards to PayPal. This is a stock I absolutely love. It's a company I look at, and I've gotten even more confident than I was previously, especially seeing the latest numbers. That was one I was a little concerned with. Seeing those numbers, how strong they were in this environment, things are going really well at PayPal. That's why it's stock number 2 or 3. Stock number 3 of these 5 stocks that is a buy here is Nike. Nike is a $73 stock here today. I got a $225 long-term price target on this stock. And this is an easy stock to buy for the next 6 months. Buy it, throw it in the filing cabinet, wake up in a few years and be a happy camper. Now, Warren Buffett talks about a moat around a business, okay? And there's certain companies I really respect on a very high level, even before he ever invested in them. And I look at those businesses, I'm like, they got a heck of a moat there. when you got a great moat, it doesn't mean you can't go through tough times. Sometimes, the consumer environment is weak, or this is weak, that is weak, and your business model is just not in the best place, right? Which is kind of the story in regards to Nike recently. But I look at Nike and I see one of the best moats you can ever find. And not a lot of people understand the moat that Nike really has on this business model. It's incredible. No one can match this. Nike spends $4 billion plus a year on advertising and promotional costs. No one can touch that. No one is willing to touch that, and no one has the sort of money. It doesn't matter what brand you are. You can't come through with these sorts of numbers that Nike does. Like, Nike could easily say, we're not going to spend that much. We're going to cut this back a few $1 billion, and we're just going to do that, and we're not going to be just fine, right? They could easily say that, but they don't do that because they understand they got to reinvest in the business all the time through marketing, promotion, to keep the brand on top, to continue this, great thing they have going, continuing on, right? And that's why decade after decade, generation after generation, Nike's even more relevant than it was the previous one, right? And so you look at all other brands that ever try to compete with somebody like a Nike, and they're basically trying to push this big ball up the hill, but eventually they get too far up the hill and the ball just comes smashing right down. And that happens to every single brand that tries to compete against Nike. Every single brand. They push the ball up the hill a certain way, and it's just a question of when's that ball going to come falling down on you. And it always comes falling down, and we're actually starting to see it fall down on Lululemon. Look at Lululemon stock down 50+%, right? You're going to understand the moat this company has around it, right? It starts with the greatest athletes in the world. Nike sponsors and has the greatest athletes in the world wear Nike branding all over them, right? It really starts like that. So you watch almost any sporting event, and many times the greatest athletes are all in Nike gear, right? Then you look at the overall sporting event, and there's likely going to be Nike branding all over the place whenever you go to watch any sporting event. Then it comes to their commercials. I don't think there's anybody in the planet who has as great of commercials as Nike has run over the past several decades. I mean, their commercials are legendary. Right now, it's Olympics going on. They had this brilliant ad. It's called "Winning Isn't for Everyone." These little snippet ads that they run, and it's brilliant. And with Nike, what they do, they're very smart about their advertising. They stand for something. That's why their ads are so memorable. And if you watch any sort of sporting events or television over time, you see these Nike ads, and they're memorable. All these other companies run ads, and it's like you don't even know what's going on. They put you to sleep. Nike makes you feel something. Now, that also attracts negativity. There's people that are offended by Nike's latest ads, "Winning Isn't for Everybody." They're they're butthurt about it, essentially, okay? They're like, "Oh, Nike, I shouldn't be saying that. Everybody's a winner," right? And it's just like Nike's not afraid to put their foot in the ground and offend people. But it's brilliant marketing in the end. Because that, when you either stand for something or you stand for nothing. There's no in between. You stand for something, you stand for nothing. And as a brand, you either stand for something or you stand for nothing. You stand for nothing, you go to irrelevancy over time. You stand for something and you prosper over time. And yeah, you're going to attract some haters, and that's fine. That will be that, okay? And so you got to understand that. And think about it. I mean, this is branding 101. Think about the biggest social media people in the world, right? The Kardashians or whoever you want to think. They're all make you feel some sort of way, and they attract a lot of hate. But damn it, who's the ones making the most money, right? Think about that for a moment. That's Nike. Then the next step is, after you see all their commercials and their branding about the best athletes in the world, all this stuff, right? Then you go out to the mall, you go to a store or anything like that, right? And boom, where are all their products featured? They're all featured at the front of the stores. I mean, you go into a Foot Locker, sometimes you think you're in a Nike store. I'm not joking. You go into a Foot Locker, wait, am I in a Nike store? Because it's just Nike, Air Jordan, everywhere in there, right? It's incredible. And sure, they have other sections for other brands, Hoka, On, these sorts of brands. They'll be irrelevant over time. It's the hot thing. It's the same thing, generation after generation, decade after decade. These brands come, they go. They're hot for a moment, and then they just flounder off because they don't stand for anything, so you can't last long term when you run a business model like that, right? I went into this store, sporting goods store, right? And I'm like, am I walking into a Nike store? Look at this. This is a sporting goods store. You would think I'm walking into a Nike store, right? It's just Nike everywhere. And so that moat, how can you beat that? You can't. You can't buy the best athletes. You can't afford to put your advertising all over the biggest sporting venues. You can't afford to run the commercials or have as successful as commercials. You're not going to be willing to stand for something because you're going to be too afraid of offending people. So you're not going to be able to do that. And you're not going to have the sort of store presence that Nike has. So that's a true moat around a business. You can't do that. No one can do that. There's one company that can do it, and they're the only ones, okay? Now, if we look at consumer sentiment, this is looking over the past 30 years, right, of consumer sentiment. Let's just be honest. It's been horrible for several years now. Several years of consumer sentiment being in, the dumpers. Could we say that? Okay, it's in the porta potty. And the reason it's in the porta potty is 3 years of inflation, sliced and diced people, right? And so you had to deal with Rona. Then coming out of that, we had some stimulus for a little bit. Consumer sentiment peaked up, right? And then boom, the inflation hit and just destroyed everybody. And so consumer sentiment's been, we went to consumer sentiment numbers in the last couple of years lower than the great financial crisis. That's how bad it's gotten, right? And you look at today where we're at, we're still kind of in that great financial crisis type area. Back when unemployment was nearly 10%, right? So this is a sort of environment we're in. That's not going to last forever. Eventually, consumer sentiment is going to peak up. We're going to come back to more normalish ranges, which a normal consumer sentiment is between about 90 and 100, okay? Look at where we're at consumer sentiment-wise. We're in the 60s. We're in the 60s. So you got to understand, there's so much room to the upside for consumer sentiment over the next 3, 4, 5 years, okay? Very important everybody understands that. And it's not just inflation that's hurt the consumer. Guess what else has hurt the consumer? Interest rates. Remember how reliant the economy is on debt, right? Home debt, auto debt, right? Revolving debt for businesses, credit card debt. That's sliced and diced the consumer. So everybody's gotten destroyed by interest rates and destroyed by inflation. That's not lasting long term, but that is something we're going through right now, and that hurts companies like Nike or any of these other brands, right? Here's my projections for Nike. Now keep in mind, Nike's net income growth could be much stronger in 25 and 26 than what I have here, but I have them doing on average a 14% net income per year from 25 to 28 and about 9% revenue growth from 25 to 28, right? And for a company like Nike, a great historical brand, you're looking at somewhere between a P of about 25 to 30 is about appropriate for this company, which puts the stock at about $140 to about $170 come 2028, right? And for a stock that's at 70 something dollars right now, it's a huge buy. So Nike's just a huge buy over this next 6 months. It's one of those stocks you buy every dip in sight for this next 6 months. And even when it starts going up, it's still a buy. That's the thing you got to understand. Even when these stocks bottom and they start trending up again, they're still going to be a buy. So just a little food for thought in regards to that. I love Nike. Next one up here, number 4 of these 5 stocks is Estee Lauder. This is a $97 stock here today. I have a $300 price target on the stock long term. It's a beaten down dog. I just bought this stock today for the first time ever. I understand 90% of my audience is males. Okay, I get it. A lot of you guys are looking at Estee Lauder, you're like, I don't know about this one. I don't get this one. Okay, let me put you on some game here. Okay, and by the way, ask your wifey, ask your girlfriend. And by the way, I never met a subscriber in real life who didn't come up to me, I think, with either their girlfriend or their wife. I'm like, dang, man, y'all doing well for yourselves. It's incredible. I'm like, geez, y'all doing really good for yourselves. Estee Lauder. Here's the deal, okay? Look at the brands they own. Now, some of these brands you guys might know if you're already on the game. If you don't know these brands, how do you not know Clinique? How do you not know Bobbi Brown? Come on, man. How do you not know Estee Lauder? Come on. If you don't know some of these brands, I don't know what to say to you guys, okay? MAC? Come on, do you know MAC? Please tell me you know MAC. The Ordinary? Tom Ford Beauty? Too Faced? Anything ring a bell there? For some of you guys, might not have rang a bell, and that's okay. But listen. Start taking these women companies serious. Start taking these women companies serious, okay? Years ago, I featured Elf Beauty as one of the stocks I was buying, right? And that stock's now gained me 2,200%. And a lot of people, they don't care about these more female-related brands. They can't relate to it. They're like, I don't buy makeup. I don't buy beauty products. Do a little research. You can learn anything in this world. Did you ever know that? You could learn anything in this world? It's not like there's a limit. I don't use a product, so I can't learn about it. I don't use NVIDIA chips. I still learn about NVIDIA. I don't use, cosmetics products, and I still learn about Elf, right? I mean, come on, man. The Honest Stock, another female-related company, that stock's up 140% just in the past year. You gotta take these female-related companies serious. This is a generational buying opportunity we're going through over this next 6 months for Estee Lauder EL stock. Stock's lost about half its value in the past 5 years. Extraordinary drop for this company, but the brands are lasting for the long term, and this will all be cleared up. The problems they've been going through will get worked through, and then the stock will be up and away, and will be a $300+ stock here. Okay, so when I look at Estee Lauder, here's what I have them doing. Now, keep in mind their net income growth is going to be way stronger in 25 and likely 26 than what I have here, because those are going to be big bounce back years for their net income. But I have them doing 40% on average from 25 to 28, and 12% revenue growth on average from 25 to 28. So this type of company commands about a 25 to 30 PE if you look at Estee Lauder over time. And so that puts the stock somewhere about $217 to about $260 come 2028. And I do believe it will go through 300 into new all-time highs well past 300 in future years, okay? Great company, great brands, and it's going through a tough time in the short term. It will work through this. As great times don't last forever, bad times don't last forever. It's just one of a gauntlet of consumer brands going through tough times. But when I'm looking out at these consumer companies, okay, I want to buy the ones that have the strongest brands. So when I look out there, there's a long list of consumer companies that are devastated right now, and their stocks are at multi-year lows, right? 5-year lows, 6-year lows, 7-year lows, 8-year lows, like prices you couldn't believe, right? I want to buy the very strongest companies. So when I look at a Nike, right, when I look at an Estee Lauder, these are some of the strongest brands out there. Go to a Nordstrom. Go to the cosmetics area. And just wait till you see how many of those brands throughout that Nordstrom in the makeup area are Estee Lauder brands. It's going to shock you. So I'm trying to put you on some game here, man. That's all I'm trying to do. That's all I'm trying to do. Stock number 5 of 5. Ooh, I'm so in love with this stock. I'm so in love with this stock. It's not even funny. I want to own the whole dang company. It's Cheesecake Factory. Price target's unlimited on this company. Unlimited. I can't even put a price target on it because this company is going through a very important next 5 to 10 years. And the reason being, so we all know Cheesecake Factory is a $36 stock here today, right? We all know it for its famous brand, the Cheesecake Factory. That's not why I'm investing in this. This brand is great. It's a cash cow. Beautiful, right? People love the Cheesecake Factory. You go get your cheesecake, you get some, food. Like, it's popular. Go there on a Friday night. It's always super busy. It's always super busy pretty much every night, right? That's not why I'm investing in this company. That's a cash cow. I'm investing in this company because they have 2 hit brands on their hands that have potential just as big as the Cheesecake Factory, if not bigger. The first one's North Italia. North Italia, I think, is going to be the most successful concept we've seen since the Olive Garden. Olive Garden really catered to a little bit more lower end, a little bit more middle class. North Italia is a little bit higher, let's call it middle class and above. I think North Italia, you look at something like Olive Garden, they got 900 plus locations of Olive Garden. They got about 200, a little over 200 Cheesecake Factories. North Italia right now only has about 40 locations. There's no doubt in my mind, North Italia is going to be just as big as Cheesecake Factory location-wise, so which means they're going 200 plus. But I think they could approach a 400 to 500 locations long-term, which is still way under, obviously, Olive Garden, right? But yeah, this has insane potential, and they do big liquor sales at North Italia. But then the other one that might have more potential than North Italia and Cheesecake Factory is this one, Flower Child. So Flower Child is this very interesting concept where essentially it reminds you a little bit of a cross between Chipotle and like a sit-down restaurant. So you go up there and you got this menu and you tell them I want, chicken, and I want it with a, mac and cheese on the side and some cauliflower risotto on the side, right? And so those are my 2 sides, and I got my chicken or I got my salmon, right? And then you go sit down, you get your little number thing, and then they bring it over to you after maybe 5-10 minutes, right? This sort of concept has huge potential, and I've been to Flower Child several times now, and I can just tell you they do pretty big volumes, and people love this place. They love this place. This has major untapped potential, and I could see this being a hit beyond even North Italia and beyond Cheesecake Factory, because Cheesecake Factory needs to do such huge volumes to make it make sense, like crazy volumes. Like Cheesecake Factory does like the biggest of the big volumes. North Italia needs to do big volumes. I look at Flower Child and I'm like, they don't have to do like crazy volume out of that to be super, successful and super profitable from this. So the amount of locations that they could put up for this Flower Child concept's insane. Now they own a bunch of other concepts as well that, you know, are successful in their own rights, but I'm telling you, like, the big potentials are North Italian. That's why I can't put a price target on this stock, because I'm like, when you have, how do you value a company that has two next major hit brands simultaneously? Like, how do you value that? That's hard. Now, even despite all the weakness in consumer and sentiment and the environment being bad and people being sliced and diced by inflation for 3 years and people pulling back on buying Starbucks and buying McDonald's, you would think Cheesecake Factory numbers have to be bad, right? There's no way they could be good. Look at this company. They're still growing. $866 million in revenue they did in the same quarter last year. They just did $904 million in the numbers they just reported a couple days ago. Food and beverage costs dropped for the company. Labor expense dropped. I don't know how they pulled off that magic trick. G&A also dropped for this company. So if you look at their total expenses as a percent of revenue, it went down to 93.5% versus 94.5%. Their income from operations went to 6.5%, so $58+ million from 5.5%. That's a huge difference for a restaurant brand like them, right? And you've got to keep in mind the environment we're in right now. I can tell you guys, a lot of mom and pop restaurants are closing down now at this point in time. A lot of them can't make it. The restaurant industry is brutal, and if volumes get soft, you know, I'm just telling you, it could be devastating your profitability. And yet you look at Cheesecake Factory, and the company is just putting up phenomenal numbers, execute on such a high level, even in this environment, right? $42 million in net income they did in the same quarter last year. They just put up $52 million. So they're making an extra $10 million on the bottom line right now per quarter than they were making. That's $40 million plus a quarter, or excuse me, over a year annualized, right? That's incredible what's going on here with Cheesecake Factory in this environment. So for Cheesecake, here's the deal. It's my 8th biggest position right now in the public count. It's about a $49,000 position. We're up about 12% on it so far. I need to build it bigger, right? I have my big 6. The big 6 for my public count is Meta, Tesla, PayPal, Amazon, Elf, Palantir. These are companies that I have $100,000+ in. They're 6 figures or bigger positions, right? That's where I want to take Cheesecake. I want to take Cheesecake to a $100,000+ position. It's going to take me a while to get it there, but I will get it there. And my hope is the stock goes lower in the short term because I want to add as many shares as I can for as cheap a price as possible. But it really doesn't matter. $30, $40, it's a buy. And I'm just going to buy as many shares as I possibly can. As far as my projections for Cheesecake overall, I have them doing 9% on average revenue growth per year. I think between obviously Cheesecake brand being a cash flow machine. Then we have Flower Child opportunity that in the North Italia opportunity for expansion. I think 9% revenue growth is pretty realistic from 2025 to 2028 on average, right? Then they should be able to outpace as revenues build for these concepts. They should be able to do about 14% net income growth per year on average from 2025 to 2028, right? A 20 to 25 PE ratio is fair for a company with these sorts of growth rates. Keep in mind, like, fast-growing concepts can trade at 50 to 100. P's in the restaurant sector. Look at Cava. Cava trades at, oh my gosh, I think it's in the hundreds. Chipotle trades at about a 50, PE ratio. So we're not even talking remotely close to those numbers. Wingstop trades at 100+ PE ratio. So we're not even talking those, even remotely close to those. 20 to 25 is very conservative cake, considering they have 2 growth concepts on their hands, right? Not 1, 2. So that puts us in 2028 at a stock price somewhere around $80 to about $100 here. So the risk reward is very attractive, folks. All right. Hope you enjoyed today's video. Appreciate y'all joining me as always. Much love. Make sure you take your game up to the next level. Pin comment down there. Apply to join my private group. Get access to 1000xstocks.com. And let's start taking this stuff a little more serious. All right. All right, guys. Much love and have a great